Today is Monday, June the 1st, and you wouldn't think that much happened today because the market was only up less than 0.5%, in case of the NASDAQ, less than 0.7%, but the volume was extremely low. And there were other things that happened. They're going to set up for a trading day tomorrow. And let's look now at our most valued indicator, in my opinion. That's the McClellan oscillator. And the McClellan oscillator bounced back up. And that's what we said would probably happen on Friday. Rather than try to test the zero line, I actually believed that the market was going to try to test this trend line here of this high, lower high, lower high. And that would mean that tomorrow we could possibly have another move up, but fail to break that lower high. And if we don't do it by Wednesday, then down we go. And so in light of that, I started placing August SPY put spreads, buying the 290 SPY and selling the 280 for $2.80. So the cost is $280 per contract, but the return is $720 per contract if, at maturity, the market is below 290. I don't expect to hold on to it that long, but I expect that on the first opportunity to add to this, I will continue to add. So I've got maybe 20% of a total position so far, and I'll continue to add to that as any weakness appears. The stacked volume tells a lot. This is the lowest volume we've seen in 4 weeks. With the exception of one day where it was tied, it's the lowest volume in 7 weeks. So this is not a good indicator. This is a market with an up day, but a terribly low volume. And the buyers and the sellers, or the advancing stocks, outpace the declining stocks by quite a bit, but that's still not the story. The story is that the volume was the lowest that it's been in 7 weeks, but the summation index continues to climb. Let's take a look at the charts. First of all, volatility. Volatility, nothing. No indication of any sign of panic, still hugging to the 200-day moving average for volatility. The Dow Jones was rejected by the 200-day moving average. I think that tells you a lot. If we can't break that 200 very shortly, then that's another sign that we're going down. The S&P continued to move up. That's all you can say about it. Just continue to move up a little bit. No sign of strength there. But let's take a look at the SPY, and let's look at for some of the harmonics that have taken place in the SPY. Let's go back to September of 2018. Let's take this high as point 1. Point number 2 would be the low in December of 2018. And then we have points along the way up. We have this one here, point 3, which was 138.2%. Let's see if I can drag that over for you. 138.2% of the 0 to 1 move. That's this one down here. So this is wave 1, which started in 2016, peaked in 2018. Wave 2 was this pullback to here to roughly 50% of wave 1. That's your first harmonic. Your second harmonic is 138.2% growth over wave 1. And then we had our steep COVID pullback to where? 38.2% of the 0 to 1, of wave 1. And then we've come back now, and we've really plateaued now at 61.8%. Point number 5, 61.8% of wave 2. That's an extension. Wave 2, this is an extension. The green line is an extension. So it's taking an anchor at point 0, an anchor at point 1, and then extending Fibonacci ratios from point 2, and we've stopped or are holding now at 61.8%. So follow these Fibonacci's, because for sure the trading market, the technical trading market, is doing just that. Apple, continues to form this solid handle on the cup and handle, which should result in a breakout higher if the market cooperates overall. Caterpillar, still a weak stock. Home Depot started off pretty well, but ended up pulling back to its 100% line. So it's having difficulty breaking out over 100% of its all-time high. So its all-time high is presenting a challenge now. This is not necessarily the cup and handle pattern that we see for the S&P, but we should keep an eye on it because it may trade like that. Nvidia down $5, but that was a hammer where the top of the day, the full range of the day from the open to the close represented the top of the nail there. FSLY continuing to break out and shoot higher. That's a good trade for people who got into it on this earnings breakout. Gold, GDX is still below the trend line. Nothing doing in gold. US Bank, let's take a look at all of the banks. And all of the banks were up about maybe 0.5%, but two of them did particularly well. Citigroup up 2.3%, US Bank up 3.8%, Bank of America up 1.2%. Everything else was under 0.5%. So those are three banks to watch for. That's all I'm going to review today. What I want to point out is that the key here is the McClellan oscillator. And let's hope it tries to make a higher high tomorrow. It won't happen tomorrow because that would require a pretty big difference. Let's look at the McClellan oscillator data for a second. And here's two numbers. For it to move down to the zero line would take a negative 35.27. So that's not going to happen tomorrow. For it to stay where it is, it takes a positive 825. So anything over 825, and today's movement was a positive advancers to decliners of 1,500. So 825, about half of that, will keep it where it is. Anything over 825 and it goes higher. If we can get another move like today of about 1,500 shares advancers to decliners higher, that means we're going to break this trend line, and that's a very bullish signal.